Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 1st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data today coming out across the pond and here in the United States. Across the pond, we're kind of getting the follow-ups to the PMI, which is Purchasing Managers Index. If you remember, I talked about how flash PMI is the main PMI number across the pond to look at, but we did get some of their final PMI numbers in the European region and major ones here in the United States. So let's get this on and start talking about it. So we've got the French manufacturing PMI coming in line with expectations. We've got German unemployment coming in better than expected at 14,000 less than 14,000 more jobs created, I should say, and it was expected to be 10,000. Final German manufacturing PMI came in line with expectations at 56.8. It's expected to be 57. Manufacturing PMI came in for Great Britain at 54.6, slightly lower than the 55.7 that was expected. We also got, here in the United States, we got core PCE, which is personal consumption expenditures price index, came in line with expectations at 0.3%, was expected to be 0.3%. Personal income finally starting to uptick at 0.4%, was expected to be 0.3%. So we get personal spending pulling back a little bit. We got personal income going up. Personal income going up is good and would look good for personal spending going forward as we make more money than we have a tendency to spend that. Then here in the United States, we got final manufacturing PMI right in line with expectations at 54.2, was expected to be 54.4. And then we got our ISM manufacturing PMI, which is the Institute for Supply Management Purchasing Managers Index, which is our major PMI number here in the United States, came in at 57.7, was expected to be 56.2. Construction spending, one of the few ones that kind of waned a little bit, came in at negative 1%, was expected to be an increase of 0.7%. And then ISM manufacturing index, all in all, came in at 68.0, was expected to be 68.5. But again, we're looking at the manufacturing PMI number. That's the major one to look at here in the United States when it's released by the Institute for Supply Management, which is the one I mentioned that came in at 57.4, better than expected. Then we also got crude oil inventories, came in right in line with expectations at 1.5 million barrel build. That's what was expected. Then we also have throughout the day total vehicle sales that just kind of get released throughout the day. Later on this afternoon at 1 o'clock Eastern, we have Kaplan speaking. He's an FOMC member. And then at 2 o'clock Eastern, we have the Beige Book, which does have a tendency to make the market move. Later on this evening, we have Fed member Bernard speaking. So keep that in mind. Overall markets blasting higher in the equities, so we'll get on talking about that with the crude oil inventories coming in line with expectations. We're actually seeing a bit of a pullback here with crude oil, down just about 10 cents on the day, but really stuck in the mud, just trending sideways for all intents and purposes. Then we have gold futures. Gold's actually making its way back despite coming down and testing that 200-day moving average. It's right above the 9-day moving average right now. I'd have to say that probably later on in the day we're going to start seeing more weakening going on in gold futures as the equities are just blasting off, at least as of right now. bonds reflecting that blast off in equities down over 2 points, almost 2.5 points on the day, just falling out of bed. It's made major valiant attempts at rallying, but with the economic data coming out, that's been pretty darn good for here in the United States and across the pond in Europe. You're going to have to say that the Fed is probably on track to continue to raise rates, which is not good for the bond market. It's going to start reflecting higher interest rates. This is what I was talking about with the Dow Jones up well over 250 points right now, and seeing a bit of a gap here, but this is the Dow Jones average. It gapped higher as the overall market was trading the futures throughout the night. This doesn't reflect the overnight session. This is just for the day session here in the United States. This is the NASDAQ up almost 60 points right now, just screaming higher, as you can see. I mean, it was pretty unabated as soon as we started getting these data points from across the pond, and then here in the United States, the market just unabated rally for the most part. Then we have the E-mini S&Ps right now up 34 points on the day and very close to the highs of the day. This is the chart of the E-mini S&Ps. This is what you can see where we started seeing the economic releases overnight from the European region, kind of settled down and then rallied into our open. And then once we started getting our data, this market just has been screaming higher. The bears well on their heels right now and probably looking to pull the ripcord on any shorts they have. The only thing that I've done, I haven't done anything today, I've got a couple of working orders. I got Gilead here. I'm trying to work a long call spread because I think it looks like it's going to want to try and settle inside this value area. If it does settle inside that value area, I think it's easily going to go up and trade into this 74, maybe 75 area. So I decided to put on a long call spread in there, and I did it, working it, I should say, in the April, the 67.5 calls, and then selling the 72.5 calls. It's pretty tight. Started playing around with a couple of different strike locations. Tried the 65 calls to get long, sell the 75 calls because that's what I originally thought it was. But $10 wide strategy, it was close to $6 debit, so that just does not fit in line with the rules that I talk about in my webinars and the rules that I follow for this type of trade. So I kind of tightened it up just a little bit, made it a $5 wide. I'm trying to work it for $2.50, which is right there in line with my max that I will really kind of go out and spend for a call spread. But it's about 10-15 cents off as of right now. So need a bit of a pullback in there to be able to kind of to get what I want out of that. So don't know if that's going to actually happen today. The other one that I was looking at and just trying to get a long call spread on was in Exxon Mobil. And with Exxon Mobil, it's screaming higher. Again, is inside of the value area after having it sold off. So I've been like trying to play around with this, trying to get onto a call spread, but with the market just screaming higher, there's just no relenting at this point. So still might try and work a couple of trades in here, but it's well off of that 50% of the debit. So for the width of the spread. So it's just not looking good for that kind of trade. Trying to play around with it. It's got too low implied volatility to really put anything else on other than a long call spread for a bullish trade here. So just probably going to keep looking at it, but I'm going to probably have to pass on that one. That's all I got for you guys today, other than Friday's webinar. Check it out. Go to protraderstrategies.com. We're going to be doing it on the long put spread. So any of these markets that have really started gapping higher, they're starting to see a lot of maybe even shooting star type setups in these different underlyings. So it could be setting up for the perfect scenario in order to put on some downside protection. So go to protraderstrategies.com and sign up for that. And if you can't take that, take it easy.